that's always been our emphasis, is to give ISOs and ISVs the tools that they need so that they don't have to go build them themselves and do this on our own. We built this for ourselves operationally, but we push it out and share it with all of our clients.
So, James, I loved our discussion with Elaina today, especially, at the spoiler alert, the bin in the box concept that she talked about at the end.
Yeah, well, I think
I know
anybody
we've had
that's
her a couple times.
yeah, anybody that's not following Elaina Smith, Secure Bancard on LinkedIn, definitely need to do so. She posts a lot of fantastic content there. Right after that, of course, we get into, we have Rich Norton sharing some sales tips and things of that nature. And then, Patti, tell us about the insiders today, which I thought was also really interesting.
Yeah, we have an update on some of the things that Fiserv is doing, including a deal it has with DoorDash and its own new bank charter. So yeah, I think James and I think we both talked about this could go either way for Fiserv, but it's definitely an interesting development.
Interesting move on their
So
part
with
for sure.
that, you have a disclaimer.
I do, yeah. So Elaina Smith, Secure Bancard, they are not current consulting clients, advertising, promotions, anything like that. Just somebody who we both respect in the industry and really looking forward to the interview. So with that being said, let's dive in and have this conversation with Elaina. Hey everybody, Patti and I are here today with my good friend Elaina. How are you doing today, Elaina?
Doing great. Thanks for having me, James.
Great to have you back as
Nice to
always.
see you again.
Yeah. So, of course, Elaina posts a lot of content on LinkedIn and other platforms, and is the COO or CFO at Secure Bancard. I always forget what the title
CFO.
is.
Uh-huh.
CFO. That's right. Of course, because you have
CFO.
that financial background and all that. So, um,
Yes.
so today we are going to talk about a topic that is actually very interesting and applicable, Elaina, of course, which is the BIN, the bank identification number. What is it? When does it make sense to utilize it? And I was going to say that one thing that's really surprised me is the number of times I find myself talking about this. You wouldn't really think you would talk about it very much, but ISOs I talk to, ISVs I talk to that are talking about the payback model or whatever, and they're all like, "Well, do I need my own bin? Or does that company have their own bin?" And it's like, it's a very interesting topic to dive into. And so we're gonna have a bunch of questions there. But before we dive into that, Elaina, it's been a little while since you're on the podcast, so give us a little update how you've been doing and how Secure Bancard has been doing.
Sure. So Secure Bancard is a payment service provider. We primarily help ISOs and ISVs help them manage their business. We do business a little differently in that we built our own platform so that we can do all of our own merchant billing, merchant funding. Our risk management happens on that platform. Basically, our business operates off of this platform. And so the exciting thing that we launched, and we actually just launched it last week, is that we've always operated in a single bin environment. And last week we launched what we call multi-bin. So we are running now 2 bins on the same platform. So if you can imagine, we're getting settlement files from 2 different processors. We're processing those, calculating all the billing and funding for merchants on the same platform. But they're 2 completely separate processors, but we have the uniformity of that one platform that we use to manage it on. So we share that with operationally, we have that internally. We don't have to toggle between places to manage business on different processors. And also our ISOs and ISVs that log in, they have the flexibility of boarding to these 2 different processing relationships that we have.
That's great. So you just used that term several times about the bin, the multi-bin setup and all that. What is it? I think our audience, we need to let them break it down and say like,
Let's get into it. Yeah.
what is a bin in the context of payment processing?
First of all, there's an issuing bin and an acquiring bin. And for the purpose of our conversation, we're going to focus on the acquiring bin. And I think the easiest way to think about an acquiring bin is as a container of merchants. They all reside with one sponsor bank. And the sponsor bank is important because that is the financial institution that connects us to the card brands. We can't go directly to the card brands without the support of a financial institution. We have to have this sponsor bank relationship. So that's the connection. So think about this one container of merchants that lives with a single sponsor bank. Usually, not always, but usually it's a single processor. So someone like a TSYS Global or a Fiserv, you have that processes for that single bin. You have exceptions, of course, where you might have a different front end relationship for the processing and a different back end relationship. But let's just, for the purpose of our example, say it's a single processing relationship. And the reason for the bin is for tracking. So the main thing where all this activity flows through for a bin is a settlement account. And so all the funds, as merchants close their batches, they're sent to the card brands, they go back to the processor, and the card brands wire the amounts of the total amount of that activity into a settlement account. And then from there, typically it's the processors that are turning around and distributing funds out to merchants. In our example, we are actually doing that because that's how we're a little different. We've differentiated. The card brands also have to have the ability to track activity that happens with merchants and track it back to the entity that owns that merchant. So that's another reason for it. If there are compliance issues or things like that, they have to be able to know, who do I go speak to about this issue that's happening with a merchant? They want to be able to go back to a sponsor bank or the ISO that owns that merchant. And there's also another important distinction between bins. There's what we call a shared bin environment, where you might have multiple ISOs processing in the same bin. So in that same container. So if you think about you're swimming in a pool, like think about you're swimming in the public pool with lots of different people there, lots of different families there, versus a dedicated bin where it's just one entity that's operating in that bin. So a private pool in someone's backyard where only they can board business to that bin and no one else.
Mm. And it does stand for a bank identification number, right? That's the
Correct. Thank
terminology,
you.
right? I actually like the
Right,
visualization. I think a bin is a good visualization of, things are going in it. I like that. That's really good.
I
So
like that. It's great.
yeah, that's a really good way to visualize that. So here's the question, Elaina. So obviously there are a lot of things that go into that, setting up a dedicated bin and, managing the settlement account and distributing the funds and all these things. So what's the payoff? Why is it that organizations like Secure Bancard and other large organizations, why is it important that they have this structure where they have this dedicated bin? Why does that matter?
I think the biggest thing, honestly, especially in the environment that we operate in today, is portability. We just don't know what's going to happen with sponsor banks, with processors. We want to be able to have the ability to pick this thing up and move it if we need to, if something unforeseen happens, and we want to be able to be adaptable in that environment and be able to do something about that. It also gives us a lot of operational flexibility because we can make if I own the bin, I can choose who my sponsor bank is. I can choose someone that has an acceptable level of risk for my business so that I know they're going to be able to write the kinds of business that I write. They're going to be able to accept that. It also helps you control your own destiny to an extent. It helps you increase your multiple. If you're building towards an exit, having that flexibility and that adaptability, that is intrinsic value that that's not just based on my portfolio and the net income it's generating every month. You kind of want to build some things into your business that aren't just P&L type things. This is an intrinsic value kind of thing that someone's going to look at your business and say, oh, they have a dedicated bin. I can do all these different things with it. That builds value into the exit of your business, if that's what you're building toward.
So that kind of what you're saying, I think, but maybe I can pose it as a separate question, which is at what point should an ISO look to build a portfolio on their own bin versus partnering with someone like Superior? I mean, what is it, just because you want to look better to a prospective buyer?
That's not the only reason. I think it's a reason, but definitely not the only reason. But first, I want to start with the reason that you should not look to your own bin, which is probably the number one question that we get for wanting my own bin. And that is, I get all these deals that I submit that get turned down in underwriting. And if only I own the bin, I could, have them all be accepted because I would be the one doing the approvals. And that is not at all it's not the way that it works. It does not give you unlimited underwriting ability for high risk merchants at all. And in fact, I'll get into some things later about thresholds and whatnot that you have to stay within. And there's reasons why you can't just load up a bin with entirely all high risk merchants. Another reason might be that you're working with an upstream partner and you're experiencing bottlenecks. So you're experiencing slow underwriting, unreasonable risk decisions. Like from your perspective, you feel that way. They're not giving you a fair shake on some of their risk decisions. Push down pricing, which we see a lot in our industry, unfortunately, and that causes attrition. So if you want, I think another big thing, if you want control, so the word is control, so portability and control, if you want control over your portfolio and you have the wherewithal to actually be able to do that, I think that's a big reason for doing it. We talked about building towards an exit, that a dedicated bin can add value if you're doing that. Now, that said, if you do want to start up your own bin and own the bin, there is significant financial investment. And in
Right.
addition to that, it's not just the outlay that you're going to spend initially, because you usually have to put up a reserve, a personal reserve with a sponsor bank.
Mhm.
It is ongoing. So there's annual registration fees from the card brands. If you're doing PIN debit, now all the PIN debit networks have their own, annual fees for each of those networks, which can really add up. And in
Mhm.
addition to that, you also have to have a strong personal balance sheet, because if you own the bin and something goes wrong, it all rolls down to you. You have liability. So there are any things that happen on that bin, you are responsible for them. So if you have huge chargeback losses that you can't cover with a reserve, that's all coming back to you. So you've got financial responsibility with that bin. You also have to source all the operational tools that you'll need to manage business on that bin. So how are you going to board to it? How are you going to underwrite business for that bin? How are you going to manage it once it's on it? How are you going to manage statements and tax reporting and all those things? Are you going to have your processor do those for you? And that's another
Mhm.
expense that you're going to have to incur, or are you going to build your own tools for it? And then importantly, you have to be able to manage risk on that bin, because like I said, anything financial that happens on that bin that doesn't that's bad is going to come back to you. So there's
Mhm.
financial risk, and then there's also compliance fines that you could have if a merchant
Sure.
processes something that they say they're accepting payments for widgets, and then it turns out they're accepting payments for something illegal, that falls back to you. So there's a
Right.
lot
Right.
of responsibility in managing a bin.
What about in terms of the structure? Why should an ISO care about the structure of their upstream, the bin structure of their upstream partner? What are some of the questions they should be asking these companies when they're looking for a partner?
So I think the biggest thing is understanding the risk appetite of that sponsor bank. Sponsor banks all have different appetites, and some of it has to
Hmm.
do with financial risk. Some of it is just reputational risk. So some banks, like we find in the South sometimes, some banks just don't want to be associated with certain types of business because of their reputation. So you have to understand what they're willing to do because you want it to fit in your business model. So if you're writing primarily in a certain vertical, you want to be sure they're
Hmm.
comfortable writing in that vertical. I also think that ISO should understand whether they're operating in that shared bin environment or the dedicated bin environment, because there is a difference. It can have an impact on you. If something bad happens in that bin, it can ultimately have an impact on you. It's rare,
Hmm.
but it can happen. And then I also think it's important to understand the extent to which that sponsor bank engages in high risk business, because of the thing that I alluded to before with the card brands having thresholds. They only allow a certain percentage and transaction count of chargebacks on their bin and higher risk business on their bin. So
Hmm.
if all of a sudden a bin's thresholds are tripped, that entity is now going to be looking to cut back those higher risk or those high chargeback count volumes. So that could inadvertently affect you if that's the
Sure.
primary type of business that you write. And then all of a sudden they're saying, no, we can't board any more of this business, or you already have these merchants on with us and we've got to kick them out. It could have an impact on you. So just understand what kind of business overall do they write? What are they comfortable with? And I think those are some important questions and reasonable questions. Don't be afraid to
Yeah.
ask these questions. I think too many of us are a little shy about asking probing questions like this, but at the end of the day, it's going to affect your business in some way. So you have the right to ask these questions. And if someone's not open about giving you the answers, that might give you everything you need to know about doing business with them.
Yeah.
Yeah.
Sure.
Yeah, I love it. I think it's so interesting, Elaina, because, this whole structure, this bin structure is something that, most agents in the industry have heard of, but they just don't really fully kind of understand, how this all works. And I think in our industry, there are so many layers a lot of times that they really have no idea. Again, it's like they may be dealing with an ISO that's on a shared bin environment with 17 other ISOs that are all working with Fiserv, and like they have no clue about that. And so I guess one of the other things I would say is even going down below. So we talked about kind of the ISO and how they, look at this and how they need to understand whether it's like, hey, I need to have my own bin, or I need to understand where I'm at in this hierarchy. Obviously, the individual agent is not in this hierarchy in terms of they're not going to have their own bin, So to clarify, like
Right.
an agent doesn't need you don't need your own bin if you're doing 15 deals a month and you've got 200 clients. That's not, that's not financially viable for you. It doesn't make any sense. So what about the individual agent? What do they need to care about? What do they need to know about? What do they need to think about when it comes to understanding the bin structure and thinking about kind of where they're at in this big hierarchy?
I think really for the agent level, it's just understanding the sponsor bank and their risk appetite. A common example I love to use is CBD because every night, there's always someone popping up new that's doing CBD and then they pop out.
Yes.
and, and someone
Yeah.
finds themselves in a situation where they can no longer write this in the place that the original place that they were writing it. And the reason for that is because these sponsor banks are regulated. They have oversight. And as soon as they start doing something and engaging in something like that, the eyeballs zoom in much more closely on their business. And a lot of times they don't like that. It
Right.
causes them to take a step back and say, maybe I don't want to write this business after all.
Right.
So just understand their risk appetite and what they're willing to do and how long they've been doing it. How long have they successfully been operating in this way? And the other important thing I would say is that as an agent, please don't disguise merchants and say that they're doing things that they really aren't doing. If they're doing
Right.
something that shouldn't be accepted, you're not just putting that merchant at risk, you are putting the bin at risk. Again, you're swimming in that community pool. So if you do anything that's going to cloud up the pool, it could not just be you. And that's not a reputation that you want to have in this industry because that's not something that we're going to soon easily forget.
Right.
Yeah.
So that is the thing. It's just being upfront and honest. And many times the things that people try to hide are so silly. And it's better for us if we know what we're going into and it's something where we can mitigate the risk and manage it, then absolutely we're willing to do it. But it makes it so much harder and so much messier if we're trying to, retroactively problem solve after we've already boarded it and we have issues. So just be upfront and honest about the kind of business that you're boarding.
Mm. So Elaine,
Yeah.
I know one of
Yeah.
the
That's
one of the
good
things.
advice.
Yeah, I know a lot of the people that I talk to, Elaina, in the industry, smaller ISOs, even medium-sized ISOs that are starting to look at getting their own bin. A lot of times, the reasons that they care about that is some of these things you've talked about, where they feel like, wow, the underwriting is not what I want, or I'm having service-related issues or other problems where I feel like there's this lack of control. And so I generally tend to advise them to like first, let's look for a different partner. Like maybe the upstream partner is just not the right one. Getting your own bin, taking on risk, managing compliance, all of these things is a huge operational headache. And it's an opportunity cost that you could be focusing your time on something else. What I'm curious to hear from you is what is Secure Bank Card doing? How are you managing this kind of, you mentioned already the multi-bin, but what are you doing for your ISOs to kind of give them the experience that they want without having to have this dedicated bin and all of the work and everything that goes along with it?
Right. So we've always operated with the mindset that we are really just here to facilitate for our ISOs and ISVs for them to be able to run their business the way that they want to run it. They have the merchant relationship. We do not have that. We don't get in direct contact most of the time with these merchants. They're the ones that are front facing with these merchants. So as far as pricing, for example, we don't want to get in the way of their pricing. We don't ever want to do push down pricing things. And the way that we decided that we would be able to manage that is to build that platform and build out pricing in the platform. So they basically just instruct us, this is the pricing that I want for this merchant. And we don't get in between that and say, we're going to push out a 20 basis point increase because we feel like it today, because our operational expenses went up and because we have to cover them. No, that's not my place. So giving them that control over their platform is an important part. And also just the operational tools for them to be able to board business quickly. So our underwriting timelines are 30 minutes or less. If you've got, within reason, not someone where we have to review 2 years of financials, but more like a retail business where we can quickly underwrite it. We have quick underwriting timelines and automated underwriting so that when we do approve something, it's automatically boarded to the platform and you immediately have a VAR sheet so that you can go load a terminal with it if that's what, or a gateway. So that kind of operational efficiency, that's always been our emphasis, is to give ISOs and ISVs the tools that they need so that they don't have to go build them themselves and do this on our own. We built this for ourselves operationally, but we push it out and share it with all of our clients.
Elaina, I have one more question before we.
Yeah, wow.
Sorry, Patti. I have one more question before we wrap this up, because one of the things I just realized that I find myself talking a lot about, I'm kind of putting you on the spot here. So we'll see if we can have this conversation. But, a lot of ISVs who are listening in, we have a lot of ISVs now that listen in. A lot of times they get confused with this concept. So there's three terms. We have the term, the BIN, we have the term wholesale ISO, and then we also have this term of the PayFac, which gets thrown around a lot in the ISV world, which of course has become a lot less popular in recent times. Largely for the reasons we've talked about operationally. What are your thoughts on these, and how, if you're talking to an ISV and they're saying, hey, we don't know if we should be a software company, is like, I don't know if should we have our own BIN? Should we be a PayFac? Should we be a wholesale ISO? What is your advice to these ISVs, which I know is going to vary a lot on size, but just give us the high level of like, how do you explain these concepts to a software company?
I think ISVs have to be reasonable about the amount of responsibility they want to take on the payments piece. There is so much opportunity for them to make plenty of income without having to take on a lot of that responsibility. And I think that's why we early on saw that kind of fleeing all of them to the PayFac model. They thought that was the best way. It was quick. It's seemingly easy. Some of them became PayFacs, which was not quick. That was super expensive and a burden. Right. So at least we're kind of seeing a pullback from that where we don't see that quite as much. Right. But I think they just really need to be true to themselves and understand what their needs are and how can they best meet those needs before they decide that it has to be a PayFac, a wholesale ISO environment, what have you. I think they should talk to a few of these different players and figure out what it might look like in each of these scenarios. I know that we are very well equipped to manage ISV business. That's the fastest growing segment of what we're doing right now. It's popular right now for a reason because there are so many integrated payments. But you just have to look for those things, like the easy things like fast onboarding. Do I have control over pricing? Can I make quick operational updates? If I need to update a bank account or an address, can I do that quickly and easily? Can I bill out for my software fees? Can I bill that out in a customized way and have a customized fee field on my statement if I want to do that? So I guess the best thing is to map out those needs and then look at the possibilities of how you meet them. But I think it's not usually where they're going out and building out their own payments operation, because you need a lot of experience. And you need a lot of operational bandwidth to be able to do that. It's usually better for them to leverage somebody else's rather than trying to build it out on their own.
Couldn't agree more.
That's really great advice, actually. Yeah, yeah. So what would you say if there's an ISV out there or one of our other listeners, wants to reach out and learn more about Superior as well as maybe working with you? They want to talk to somebody on your team, where would you send them to learn more?
Sure. Well, you can always find me on LinkedIn.
That's for sure. That's for sure.
But Ross Pop and Mike Gallagher are our sales team, and they're reaching out as well. And right now, the thing that we're really rolling out is, because we have this multi-bin functionality, we're rolling out what we call bin in a box. So if you do want to go down the path of having your own bin, but perhaps you don't want to have to do all of the steps yourself. You don't want to have to go find the sponsor bank. You don't want to have to go negotiate the processing relationship. You don't want to have to go source or build your own operational software. We have that all for you. And we are letting people, if you're, of course, ready to make that step, we are letting people own the bin, but owning it with all of our tools and all of the relationships that we've already leveraged. So it makes it
Oh,
much
wow.
easier. So that is the thing that we're moving forward now, which is exciting because I don't think it really exists in the industry. So we're super excited about it. And I think we're doing it in a good way because we've been operating our business this way for several years and it's worked quite well for us. So we're excited to share it with others.
So that sort of adds a new dimension to the multi-bin platform concept,
Yes,
right?
yes.
Yes,
They
yes.
won't all just be ours. They'll be bins that belong to others. And we're actually getting ready to launch one early next year. So we're
Awesome.
excited about that. And the interesting thing too is that the thing we've always envisioned with this software is it gives a lot of oversight in for financial institutions, for sponsor banks. Imagine, I've got multi-bin
Hmm.
on this platform. Imagine a sponsor bank that has the platform that they can roll out to all of their ISOs. And they have
Right?
visibility into all the activity for those ISOs on one single platform. That's the way I've always envisioned it.
Hmm.
And the exciting thing is that those conversations are starting to happen. So they're seeing the vision that we've always seen. So I'm excited about that part of it
Yeah.
because from my finance previous audit life, I always think about for sponsor banks, how do I make their lives easier? And that's a
Right.
great way to do it.
Love it. That's
Yeah.
great.
Great
Well, Elaine,
advice.
it's
Great stuff.
always a pleasure having you on the podcast, Elaina. Really looking forward to getting this one out to the audience. I know they're going to love it. I'm sure many of them will be reaching out. And so wishing you great success as you do this new multi-bin and bin in a box program. And thank you for taking your time today. Really appreciate it.
Thank you, James. Thank you, Patty. Good to see you.
Hey, great to see you. Thanks again.
So I'm back here today with my good friend, Rich Norton. How you doing today, Rich?
I'm doing great. Great to talk with you. I really enjoyed doing this. It's fun.
Yeah, I do too. For those of you that are watching on the video, of course, you might notice that Rich and I have been wearing the same shirt for the last 8 weeks. That's because, of course, we sit for about an hour or so to do these, and it's just a lot of fun for us to just kind of connect and talk through this stuff. So I was thinking about what we would do here at the end, and I want to talk about verticals. So on the podcast, I talk a lot about specific vertical focus and focusing on one or another, or even just exclusionary. What businesses do you not walk into? So I'd love to hear what you do and your thoughts about which businesses you try to target, and then maybe share if there's other members of your team that maybe do things differently.
Yeah, that's the beauty of this business. I'm amazed that there's so many different ways to have success. And I've used examples of other representatives. I take one of our top revenue producer with our company. His name's Brian Ehrlich, and I'm amazed at the way he sells because he's completely different from me. He focuses on these big giant businesses, and his average merchants are probably doing 500,000 a month, and
Wow.
he's got all different types of programs that he uses, lots of knowledge. And what he did, he just locked himself in a room and studied and learned about all the different programs and learned as he went. And he doesn't really do any cold calling. He doesn't need to. And then he develops partnerships. And from those partnerships, they feed him leads like crazy. So
Right.
that's just one way. I have some representatives that all they work off is referrals. They've got a certain amount of different types of businesses and they keep going back and getting names and getting referrals that way. Partnerships are great. There's using the phone, Chamber of Commerce, BNI groups, that's gravy on top of what you're already doing.
Right.
I think for new representatives, because I don't want anybody to get the misconception that all we do is just talk to mom and pops. We have representatives have all different types of styles and different ways that they're doing it. I think it's important to find your niche and then go out and make it happen. But I do feel that for new representatives, I've always been the direct sales guy. I come back from that
Right.
door-to-door encyclopedia type of mentality. I'm the
Right.
one call close guy. I want to get in, get out, move on to the next one. So
Right.
I think for new representatives, that's a good way to learn the business is to get out there and cold call. And then along with it,
Right.
use the phone, work off referrals, put all that together, and you're going to spell some great success. So I like a lot of auto repair, tire shops, little restaurants, little diners, and then get referrals off them because some representatives think, hey, I'm going to go out and go to Walmart and Target. Can we write those businesses up? Let's not focus on them. Let's go to the businesses where you're going to find the owners that are there. And when you
Yeah.
get the mom and pop type businesses, what's amazing about that too, when you do run across some of them, before you know it, you get this amazing opportunity. It's like, hey,
Right.
I have a 15 location deal that I'm going to write just from cold calling this one tire shop. So
Right.
big elephants will come out of that. And
Yeah.
we have a team that will help you for the more complicated ones. But I think it's important as a new representative to get consistent success, making money out of the gates.
Right.
That's probably your best bet.
Yeah, and the other thing I'll tell you, Rich, what I found with agents is if they start out that way, right, and they're just kind of walking into most of these businesses, not excluding anybody unless it's like you said, a huge corporate or whatever. A lot of times from that, right, as you mentioned, not only might they get a whale from that, but also a lot of times after 12, 18 months, they do start to zero in and they go, well, wait a second, I'm really good at for me, it was pizza shops. I think at one
Yes.
point,
Yeah.
I think at one point, Rich, I think I had 260 pizza shop locations in my personal portfolio because I just got really good at selling pizza shops. And I literally made business cards. I was the pizza shop payment guy,
That's great.
um, and I would use those whenever I would go to a pizza shop. I would do other businesses as well, but I had a good point of sale system that I liked that I would sell there, and I had referrals and I had all that. And so I think that developed because I was going to all businesses, but it was like every time I went to a pizza shop, I sold them and I got a referral, and I was like, well, this is great. So
Yeah.
it seems like you kind of can get that data, but you won't know until you just consistently prospect for a while and just do the business, start making money, and then all of a sudden you wake up one day and you're like, I've got 10,000 a month in residual coming in, and I've got all this data, and now I got a little bit of money I can reinvest in my business. Maybe I do want to go with a specific vertical or start to focus in a particular way. I don't know if that's something you've
Absolutely.
seen as well, but
Absolutely. Yeah. Yeah. That's going back to finding your niche. And
yeah.
as you're telling that story, I think it's funny. You're probably coming home every night. Guess what we're having for dinner? Pizza.
Absolutely,
you,
yeah.
you could
Uh,
easily gain a lot of weight too, because when you're there, it's like, yeah, I'll take a pizza while I'm here. Right.
Yeah,
But
everywhere I would go in the whole area, I could get free pizza. I just walk in and,
exactly.
oh, James is
Yeah,
here. Give him a slice of pizza. And it's like, oh, all right.
exactly.
It's,
That's part of the other blessings of what we do.
yeah, right.
But yeah, so absolutely, there's whatever you're going to find that, hey, I'm really doing well with this niche or this type of way that I'm doing it. And a lot of that really is it's mental, because it's
Mm,
if you have a good experience, like, hey, I do great with pizza shops,
right.
guess what? You do great with pizza shops.
Right, right.
But
It's
if you think
self-fulfilling
I had a
prophecy.
experience with this type of business, and then automatically we're thinking I'm not going to go because I've had bad experience. So really, a lot of it just has to do with our mindset. But I think it's just finding what you're
Yeah,
comfortable with and what you're excited about doing. And
right,
that's the beauty of the business, that there's so many different ways of doing this industry.
right.
And as I teach everybody, they all work as long as we work.
Yeah, I
And
like
that's the
that.
key.
Yeah, I
Yes.
think I think it's so important because you do want to, like I said, for 12, 18 months, like you want to force yourself to go to pretty much every business because you
Yes.
can get these biases where you're like, oh, well, hair salons are terrible. No, they're not. Like it's,
Yes.
but down the road when you start to get that knowledge built up about certain technology or systems or whatever it is, right? You can leverage that. And so I love it. I think it's great. As always, Rich, fantastic advice. Really appreciate your time. Share with us your contact information as you have done so graciously so many times for those who want to reach out and learn more.
Absolutely. Yes. If you'd like and you think you'd be a good fit with our team, give me a call at 904-434-4635, or you can email me at payrock, Payroc, Rich Norton at gmail.com.
Awesome. Rich, thank you so much. And I wish you great success out there.
Thank you. Appreciate you very much.
So, James, we have some big news from Fiserv again. I know, I think we just, not too long ago talked about their deal with,
Walmart.
selling Clover through Walmart.
Right. Right.
But now the company has snagged a bank charter.
Okay.
It's a limited service bank charter for providing merchant services. This means it will no longer have to partner with banks in order to settle payments. And it's interesting, we just spoke with Elaina, who's down there in Atlanta, and this was from the Georgia Department of Banking and Finance. So this is our Georgia week.
Yeah.
But first data, which Fiserv acquired back in 2019, had its own joint ventures with a few banks, most notably B of A, but that partnership was terminated following the Fiserv acquisition.
Right.
So now, Fiserv can, have its own banks, which is pretty cool. But in addition to that, the other big news from Fiserv is a collaboration with DoorDash to embed financial services within the online delivery company's digital platform. It's part of something DoorDash is calling its Crimson program. It'll allow DoorDashers to get instant access to their wages and rewards, for example, with funds placed in deposit accounts as well as on debit cards, and the ability to reap the rewards. Core to this program will be connection points to leading Fiserv platforms and technologies, including FinExit, which is a next-gen ledger built on open architecture. It's a modern system of record that enables brands, marketplaces, and fintechs to deliver financial services through select sponsor banks. In the case of DoorDash Crimson, the sponsor bank is a community bank and Fiserv client with branches in North Dakota and Wisconsin. And as I said, both of these announcements come on the heels of Fiserv partnering with Walmart on a pay by bank offering. Initially, I've learned a little bit more about that program. Initially, payments will process through the ACH, but beginning next year, Fiserv says it plans to route transactions over its Now network, which is linked to both FedNow and RTP. And as our listeners probably don't know, Now is a 10-year-old network that Fiserv launched to support non-POS transactions like bill payments, P2P, account-to-account transfers.
Right.
And do that all on a single platform. So they're really getting immersed. I think they're trying to get a lot of dominoes set up. Let's just hope that they don't get knocked down.
Yeah, and I think in their mind, they're hoping that they're not setting up dominoes. They're hoping that they're creating puzzle pieces that are all going to fit seamlessly together. Whether or not they have,
That's probably a better analogy. Yeah.
No, I actually think yours is probably better, but I think mine is what they want. I think yours is what they're actually creating. So, but we'll see how it all pans out. It's going to be really interesting to see how it goes. So, thank you, Patti.